Why do Australians love investing in Australia, Canadians in Canada, Americans in America, and British in Britain? Why does the average everyday investor love investing so much in their home country? As seen in this figure taken from Vanguard, when compared to the global equity index, home bias is pretty much standard in these developed nations, notably with Italy and Australia allocating 30 times their global weight to their home country. Now, for me, from an investment perspective, it doesn't make much sense. Historically, looking back since 1970, on the world stage, most of these countries, with the exception of the United States, make up very small percentages of the overall total world stock market. Now, with that being said, for my own portfolio and the research I have done, I figured a balance needs to be struck between the two. As many know, a well-diversified portfolio can lead to reduced volatility and increased portfolio returns. According to Vanguard Australia, since 1970, a diversified portfolio allocating 60% to international equities and 40% to Australian equities outperformed both the international and Australian shares by 0.1% and 0.9% respectively, all while having returns that were between 5 to 25% less volatile throughout this time period. Thus, not surprisingly, a broad, geographically diversified portfolio can increase my portfolio's overall returns and reduce the volatility over the long run. When looking at the Canadian market, according to Vanguard Canada, historically speaking, the Canadian market has been more volatile when compared to the global market. However, there has not been a proportionate increase in returns. Thus, if I had severe home bias to Canada, I would be experiencing more highs and lows, but not getting the benefits of such volatility when compared to the global market as a whole. Based on more recent findings in Australia from 2009 to 2024, when taking the franking credits into consideration, if you allocated 100% of your portfolio to the ASX 200 index, you'd be taking on the same amount of volatility with a reduction of 2% in annual returns when compared to a portfolio of 94% international and 6% to the ASX 200. But let's not forget recency bias, with the US market doing exceptionally well over this time period, and thus has led to the international equities outperforming by 4.5% since the year 2010. When looking back even further to the year 2000, this reverses with the Australian market outperforming by 2.7%, and then reverses yet again back to 1970 with the international outperforming by 0.8%. So, how do I allocate my own assets geographically? Well, based on the research I've conducted for my own portfolio, I decided on an overall geographical allocation of approximately 20% to domestic stocks and 80% to international. Due to my situation where I hold assets both in Canada and Australia, when looking at my total investment asset allocation of both of my portfolios combined, I have a target of 10% held in Australian equities and 10% in Canadian, with most of these holdings held in their own home currencies in their own respective investment accounts. When looking internationally, based on the research I've conducted for my own portfolio, as well as the current total world geographical allocation, as seen here in the Vanguard Total World Stock ETF, my geographical investment targets are 60% USA and 15% international, which is the international markets ex-Australia, US, and Canada. Now, if you do the math, you may notice that there was about 5% missing, and this is for the fluctuation in the asset allocation towards money markets and bonds with targets between 0 to 5%, mainly for rebalancing purposes of the portfolio. Now, here are my final thoughts. I am no economist, investment advisor, or financial analyst, but I do ask the question, what are the odds that my home country, or home countries in this case, will outperform the international markets or the global markets long term over the next, say, 50 years? I would say personally, probably pretty low. Now, with that being said, historically, there is a lot of supporting evidence saying that there is needed for a balance between the domestic stocks and the international stocks, with evidence supporting that domestic stocks should be slightly overweighted in proportion to their global weighting as a whole. Now, I pass the question on to you guys. Do you overweight your investment portfolio to international or domestic? And what's your reasoning behind that? Now, if you liked the video, leave a like, subscribe, and thanks for watching.